Today's number is 38. That is the result of a shock PPI inflation number that just came through. And it all has to do with something called vegetables. Why does that matter though for us as traders and investors? Well, in today's video, we take a look at whether Wall Street is finally rotating into some of the other stocks and everything is getting volatile again. Bitcoin just fell over 5% in one session after recording an all-time high. Ethereum saw a collapse and everybody seems to be rotating. What is it that Warren Buffett knows that we don't? In today's video, we'll break down what's happening to certain sectors in the market and why we always come from that abundance mindset. Guys, could be some big opportunities on the horizon. Let's break down stocks, commodities, and cryptos as we grind higher, but maybe not in the way that we have over the last couple of months. See you soon. Well, welcome back everybody to The Daily Show. My name's Tom, and as always, we'll go through the macro, the data, and of course, some dark pool transactions. Yes, we've got a couple back, and they're all to do, it seems, with a new sector, healthcare, starting to find a little bit of gains over the last few sessions. But really, to kick things off today, we need to talk about the big one, which is, of course, the inflation figures. And there were some pretty shocking results in this inflation figure. Not only did we see PPI go up 0.9% month over month, but we also saw veggies supposedly go up almost 39% month over month in terms of their costs. Now, of course, that's more of a shock figure, but the main thing here is that we are starting to see potential impacts of inflation. And again, why is that? Well, it could be coming from those tariffs. Let's have a look here at the PPI numbers, and you can see that this is a pretty shock number, one of the worst that we've had in the last couple of years. And in particular, this was a massive standard deviation switch. Now, most of the time, these economists, when you average them all out, get pretty close to the number. But when you have a shocking number like this, it can create a lot of volatility. And we saw initially when the result came out, what happened was the market went down. Straight after that, though, the market did recover through the day as people bought the dip. And it probably has a lot of you scratching your head saying, how does this make any sense? This market's crazy. I don't understand what's going on. And that is, of course, justified. But do remember, following the flow is the key. And there are plenty of new moves that are starting to happen in weak sectors, or what have been weak sectors, that are starting to come through. Take a look at this chart here from Mike Zaccardi and Goldman Sachs. And you can see here that we believe tariffs are going to show impacts over the next couple of months. And according to Goldman Sachs, it's likely they show up in October. Now, why is this important? Well, at the moment, US businesses are starting to absorb, of course, all of the costs. They're only passing on a little bit of it. But this will eventually shift, and over 67% of the overall costs are expected to actually fall on the US consumers. So will this end up impacting retail sales and other things? It's my guess it will, but at the same time, it's not going to be the reason that a market crashes. It's going to exacerbate an already existing condition, which if I had to guess would probably be something to do with debt and the ability for people to pay it back due to maybe losing their jobs. Remember, unemployment is probably the most important figure right now going on in markets. Now, let's move over from the inflation figures, which we'll join back into the S&P 500 analysis later on, to what's going on in cryptocurrencies, because this has probably been the most interesting area over the last couple of weeks, and many of you guys have been doing very well. Whether you've been in Ethereum, Solana, or any of these other coins, including Bitcoin, things have been going up. And we just saw a new all-time high for Bitcoin. But take a look at this. Allocations are going up across the board. And you might think, oh, yes, everybody's already in. But look at this latest fund management survey report here from Bank of America. It shows that 75% of FMS investors are not structurally allocated to crypto. And that means there's a lot more pie to come in. Even the people that are allocated aren't very allocated. Most people are around 2% max. And of course, we see a similar thing even in gold, which, as you guys know, is one of my favorite metals. I call it the Holy Trinity: Bitcoin, silver, and gold. If you worry about fiat all the time, these are usually those kind of particular pairs that most people kind of go to. And some of them are still well under where they may need to be historically based on the type of system that we're seeing unfold upon us. And of course, the debts that are just going up astronomically each and every day. Well, I thought this was a pretty interesting stat. 20% of FMS allocation is basically only 2% in gold. 41% of the allocation is still at zero. So it kind of shows you, even if we get to the point where gold is, we're still looking at not as low as you'd probably think. And this provides a lot of upside momentum. Remember, these guys will usually only allocate if, number one, they're pretty much everyone demands it, or number two, they think that it's going to give them more average returns. But I did notice that with gold, there are a couple of maybe smart cookies that are starting to go heavier into it, because 8% or more has driven up to 7% of overall allocation. Now, why this is important is because we could be at the beginning of another decent run for crypto. And what I mean by this is the alt season actually may be upon us. You remember that alt season that everyone's been promising for a long time? Well, if we look at previous cycle history, which we'll do in a moment, remember it tends to run at around the end of this year. And often alt season is short-lived, maybe only 1 to 2 months. And if it goes similar to last time, maybe it's going to come sometime around that October-November period. Now let's have a look here at ETH futures. You can see that they've been skyrocketing since everyone on Wall Street decided that Ethereum was the best coin, and we saw huge amounts of liquidations. Now this was over 24 hours ago, but as you may have seen me mention over on X, follow in the links in the description down below if you're interested there, guys, I did mention that we had short squeeze, kind of, a lot of liquidations, and on top of that, we hit some of those key technical levels, particularly that 46 to 4,700 level, which marks those all-time highs from a couple of years ago. Speaking of where we could go, I have been a big believer in halving cycles. Of course, I'm a huge fan of any type of cycle or cyclical pattern and understanding the general psychology that goes underneath it. I think it helps a lot to have confidence in systems when you build this. In fact, I built an entire course called the Advanced Masterclass over at fxevolution.com, which goes through a pretty much thousands of years kind of cycle that has continued on all the way through to this point, and specifically in modern history has been really driven by greed and, of course, fear during the end of it. So why is that? Well, because, of course, human psychology doesn't tend to change too much. We want quick fixes. It tends to occur quite regularly. But let's take a look here at the crypto side. Now, you can see that this particular one here, which I think is a cool looking chart. I've done similar like this past years. Basically was done a while ago. And you can see that generally, if we were to follow similar patterns, we could be topping off in Bitcoin and actual crypto somewhere around that Christmas period of this year. And I've always kind of felt like it's something to do with Thanksgiving as well and Christmas itself. It's like that, if you've been watching crypto for a while, whenever there's that Thanksgiving, you often get that hype into it. Then everybody sits down and says, oh, I'm now a crypto millionaire to all their family members, and they jump in. And then, of course, you also have the Christmas kind of rush that tends to happen. You often get a lot of volatility around that period. But if we are to follow it, then that could basically mark the top 4 Bitcoin, at least in this cycle. And that would make sense to previous periods. And they've been pretty accurate. And of course, even the halving period, this is one that we've, of course, discussed here on the channel, and it helped us to pick up a really good technical analysis late last year based on that. So that could be really exciting for crypto, and I think we will cover a few more alts in the future on the channel, although we're not an exclusive crypto channel. Whenever something gets exciting, obviously we cover all markets, so we might as well jump on into it and have a look. Let's take a look here at the S&P 500 though. This is a cool chart from Mark Ungewitter, I think it is, and basically you can see here that we have a post-GFC trend channel. And this has been fairly decent, actually, at picking down the markets and kind of stopping them. Now, obviously, post-COVID, we had that huge adrenaline FOMO that hit into the markets. Now we've kind of found a zone where we're going up on an AI type of run and everyone's feeling euphoria. We certainly could overshoot it, but I think this does come back to, kind of something that I've discussed many times, which is that when you get to these types of periods, and obviously I've been talking about this since 6,300, we're quite a lot higher than this. I often say that it's best to look for rotation and best to, hold for the trend and then look for other opportunities. Because sometimes when you get a little bit high, there's something more happening underneath the hood. And often it can be a little bit of exuberance. Do remember though, markets are inherently bullish. So it's very difficult to be bearish during any normal time. And you guys know that and everybody else does. It's difficult to be a bear. Sometimes you've got to just allocate to the point where you're just going, okay, I'm going to do rotation. Now, we've been following the bull run, so it's not really a problem, but something you've got to keep in mind. Retail options put call ratio starting to get up there as well. Basically, this means that everyone's feeling euphoric. Take a look here. You can see it's now in one of the largest runs, the sixth strongest buying streak since 2020. And most of these, if you look at the dates, you might notice something pretty interesting about them. A lot of them do run kind of near the end. So you've got these November runs that end here. You've got the March one, and then you've got the two classics that go into those August sell-offs. Well, of course, in this case, we've got a epic run that could be now starting to show signs of a bit too euphoric. And I think we're going to see that in rotation. Allocations to equities are at their highest level since 2007. I don't think that's a problem, but it does mean there's less cash on the sidelines and there's more money going into the markets, which is, of course, a good thing for the bulls. And semis have done what you usually would like to see in terms of strength. They've swung up. Now, according to the latest Nautilus research report, you can see here, guys, that when we see these reads, there's usually a little bit more to go. So what tends to happen is we sometimes get a pullback in time or a little pullback, and then we get a nice rally. So if you're feeling bullish at the moment, there's no real reason not to based on this. Even if we do get these pullbacks, historically, as you can see over here, we tend to still be bullish over the next 3 and 6 months. So we've said that quite a few times here with semiconductors. And as you guys know, we follow semis very closely. The whole rally so far, semis have led, along with those other couple of stocks, the top 10 that we've been talking about. And that has been kind of the underpinning of this bull run. Other things that have happened so far is earnings have lived up to expectations. Remember, technology is doing what it's meant to do. And that is, of course, very strong. Now, up until the last 24 hours, we had two back-to-back almost 80% days. I think it was 80% plus, then 79% breadth. Now, a lot of you guys would know if you've been watching around, and we've talked about it as well, that we've been in what we call a concentrated or low breadth market. That basically means less stocks are going up to push this market up. And that can be considered good or bad. A lot of people say bad breadth is really bad. To me, it just shows the sign of the times. But remember this, it's one of those things where generally in a good economy, you'll see a broadening pattern. That is, more stocks will start to pick up. Well, funnily enough, we just started to see this here. And you can see Frank Caparelli did do a good kind of result here and showed that. And what that usually means, guys, is we're starting to get rotation. And in those top 10 stocks, remember, those have underperformed the last two sessions. And all of a sudden, we've seen a little bit of movement into things like healthcare, into other stocks and around the board. And this, of course, can show that rotation. And what happens is if you lose the largest concentration stocks, then you often get this type of action in markets or even a little bit down. It can drive higher, but in 2020, which we'll have a special on, that's actually what happened. We actually drove down, and then other sectors of the market started to perform better. Speaking of the market overall, you might think, well, wait a second, we just had a massive PPI number. Surely we can't cut interest rates. They're still pricing in a couple of rate cuts. And look, it is, a normal thing. I know it seems weird, but how can you be at stocks at all-time highs, gold at all-time highs, several markets at all-time highs, debt at all-time highs, all sorts of things. And then you're like, yeah, you know what we'll do? We'll just cut rates. Well, it's not unheard of. And as you can see here, sometimes it creates a little bit of volatility initially, but generally speaking, it still is bullish. And in fact, it tends to lead into a pretty good 12 months. So I think it's very important here that you remain on the bull end in terms of markets, at least in terms of the general kind of thought process of now, but you keep a very healthy level of skepticism if certain problems arise. And it's all about what type of problem comes, because we know tariffs are going to hit the economy at some stage. And we also know that we're going to need further support. We've got the tax cuts. We've got, of course, the buybacks. We've got all these things that help the market going up. But what are we going to need in the future? Probably Fed to do several rate cuts. And that, of course, is all going to come to a head next year when the Fed chairman most likely gets changed. And of course, we'll see how many cuts we get then. It could be absolutely wild. Let's now talk about opportunities. Now, this is a deadly stock. This stock has gone down. Q2 was horrible. EPS miss, guidance miss, data breach, all sorts of things. But Buffett just bought, of course, in the filings a lot. I think also Burry bought a lot. And we did hit a good technical. Now, I'm not really too much caring about everyone else purchasing in. The main thing here has been the demand. And a few people in our private community have actually been picking this one up recently around these levels. Now, is of course a little bit of a bottom basement dwelling style stock? Yes, but I think the key here is the technicals. Remember, when you hit a great level of demand, when you see a bit of a bounce, when you see a new low being formed that's then bid up a little bit, what that tells you, and again, volume is up, that tells you that somebody is thinking differently. And of course, what does Buffett like to do, or any of these guys? They like to buy fear, and then they like to get a little bit greedy when prices look good. Now, this was up quite a lot after hours in terms of United Healthcare, but it's been absolutely destroyed. And what this is doing is it seems to be leading into healthcare looking a little bit better. The last couple of sessions, this is the 5-day session change. Look at the differences here. We have KRE, we have home construction, we have biotechs, we have healthcare. All of these stocks and sectors have not been doing very well. In fact, this year's been metals out in front, which of course we've been a huge fan of. You've got gold stocks as well, materials, and then of course you've got semis after that. Well, this could be a rotation. And I think that it's very important to pay attention to rotations in the market. So let's take a look here at a couple of large trades that have come through. First one is a 3 times levered big IWM position. So this is, of course, the Russell 2000. We see a large trade on the breakout here for the Russell. Is this the beginning of something big for the Russell? I'm interested to see your comments down below on that one, guys. Of course, people have called the Russell rally for a very long time. We will look later at IWM versus SPY, which is one of my favorite combos to see whether the Russell's really improving. But certainly a large trade coming through. Another one was a 2 times long in LLY, which interesting again, because of course the sector that we're starting to see find some flows into it, suddenly there's massive transactions coming in everywhere. And then the other one was PLTR. And you might say, well, what's this got to do with anything? Well, we saw the largest trade ever on the 2 times levered ETF, and that came in right near the highs here. Now, could it be a buy? Sure. But my guess is it's probably someone saying, you know what, that's been an awesome run. Congrats to me. They've probably taken huge profits. And maybe they're saying, you know what, time to rotate. So there's a little bit of rotation in the air. Even with the Mag 7, we saw Tesla, Google, and Apple pick up over the last couple of weeks, and they were down by quite a lot coming into it. All right, well, let's now jump over to distribution of breadth. Remember, when we're in a concentrated market, such as we have been, then generally speaking, we will eventually see some rotation. And remember, when that happens, when we start to see a rotation, last time we can only go back to 2018 and 20 for this, but in 2018, we actually saw a little bit of weakness come into the market. It went kangaroo-y, and that's pretty much what you would usually expect around this time of year. Again, haven't seen it yet. Seen larger amounts of vol come in though. And then overall, the buy the dip was still in place. So we don't have a reason to say this market's going to epically crash. And we've said that for a while yet. Okay, I'm still looking for it. And of course, we'll track it throughout time. But that is going to be very important. Do we expect volatility to continue? Yes, especially with that PPI data. That will have the market on, I guess you would say, tenterhooks. And do remember, in terms of the data as well, we are in the euphoria stage of this run. And we also tend to have bad Augusts, but maybe that's not going to come true. A lot of people know this stat. It's a good one here from Ryan Detrick. But in general, I still think Q3 is going to be all sorts of volatility. So a lot of you guys don't believe that anymore. But just remember, we've done this for years, as have you guys. And the thing is that you've just got to always look at it as Q3 is notorious. We're only just at the beginning. So it's notorious for doing this type of stuff. And you've just got to say, okay, well, do I want to be in the hottest stocks anymore, the hottest concentration? Or do I want to say, you know what, maybe the market is starting to rotate? And I do think rotation's starting to come through. Let's now jump into the charts. We'll look here at the S&P 500 to get things kicked off. And as you guys know, it's been bullish, bullish, bullish. We had a little bit of a sell there down to the 6,200. Did not close below that, so still bullish. And it's still bullish. The reality is there's no reason to say that this has gone bearish yet. At the last 24 hours, it almost started to look a little shaky there during that PPI, but it was bought the dip after that. So no reason to say that market's going down just yet, guys. Here are the options high and low levels. Again, no reason to say it's going down. Now, I could load up a lot of divergences. I know you're going to get them, but there's no reason to put those divergences on. A lot of you guys sometimes criticize it and say, well, why aren't you putting MACD divergence on? Why aren't you putting RSI? Why aren't you doing these things? because they'll always show in this type of pattern. Once you learn how the indicator works, they'll always show up. So it's not really going to give you that much edge. What generally gives you more edge is recognizing the flow changes. And we're still looking for giant dark pools. We've had very few. We've only had them in rotation. We haven't had them in a general blitz of, wow, everyone's selling the Russell or everyone's selling the NASDAQ or the US 500. But when we see it, we'll update you guys. Let's now jump on over to the gamma. We're still in positive gamma. 6450 to 6500 is now the positive gamma level, with 6500 being, of course, the call wall of choice. So it looks like the market's going to try to climb into that zone at this stage, climb the wall of worry. Tesla, yes, I still think 350 is kind of like the target zone here from the previous video. And you can see here with NVIDIA, we've still got that 185, which looks pretty interesting. So this is kind of just sitting underneath a very, very decent call wall. So just before we jump into the charts and we look at the lead indicators, I want to say a big thank you to the sponsor of today's video, which is Tiger Brokers. Now, as you guys know, we've worked with Tiger for quite some time. And not only do they offer extra specials for the members in the audience right now, you guys, but also they've been listening to us and they've been winning awards because of that. Whether it's from customer satisfaction to other awards, they've been getting quite a few over the last couple of years, which is awesome. And as you can see, they've been improving some of their things. You know that I love one of the big stats, which is being able to trade markets 24/5 in a world that is maybe more uncertain than ever before. And Tiger Brokers does allow you to do that, as well as now doing conversion. So what I've just shown you here is Tesla stock. And if I want to buy a fractional share, which we of course can do with Tiger Brokers, then I can put it in as a limit. I could then say, I want to buy this. And instead of having to convert Australian dollars first, then go directly into the stock and then place the transaction, I can do it all in just one touch. How cool is that? This is just another one of those reasons why Tiger Brokers continues to innovate and continues to understand what you want. So if you're interested in finding out more about what they do, check out the links in the description down below. So let's take a look at some of the lead indicators right now. First off, we've got yields, which of course bounced after the PPI number came out. The main reason is, of course, concerns over inflation returning means that the Fed will not be able to make as many rate cuts as expected. And I would say that post that PPI number, now the inflation reports will be very, very important indeed. If this goes bad, that could also bring down the Russell. So do be aware that is a huge component. In terms of banks and then bonds, what's going on with the bonds? We did see a spike up only about a week ago in terms of volatility. That has not eventuated into a second spike just yet. So still watching this, but certainly some concerns into this kind of period of time. We do not usually see spikes in this, and it does tend to be relatively good lead indicator. So that's something that we are watching very closely. The US dollar, no real movements, a little bit of an uptick after, of course, yields raised across the board. And we are looking for a 98.80 plus. And if we get past that, then we're probably looking back to going bullish. Eventual level would be about 101.60. But remember, this is a very, very heavily traded pair right now. And everybody is, of course, trying to go bearish on it. That's why the market is starting to look more bullish. Now let's move over to gold. What's going on here? Well, it's just still chilling and we haven't got a breakout yet. Key levels are going to be 34.50. We get above 34.40, 34.50, close. I think it's going to be really serious for gold. We're obviously getting targets coming in here from the macro side that could be leaning into around 4,000 or 4,200. Silver, on the other hand, still looking pretty decent. Down on the last 24 hours, but looking towards the 42, 43 ideally in the future. And oil still really confusing. So I think oil is well worth just chilling off on at the moment and not making too many big decisions. Tesla has been up in recent sessions, but it's still kind of consolidating a little bit. Broke the downward trend line, broke a new high. There's a decent chance that if it keeps staying around here, that we could be at something like a 380 sooner than later. 350, of course, is the first technical target, though, for Tesla. And NVIDIA, no changes to this stock, guys. Continuing up. And, of course, we always look at semiconductors versus SPY to see whether the market's actually turned bad. And the answer is quite simply no. It is still quite bullish. So, of course, we're looking on the bullish side there. Chinese stocks took a little bit of a hit after making a new high, although I still think they're looking relatively solid. New high is good. Yes, it's rejected, but overall, it's found nice buying on that 50-day moving average. So that's, of course, a key zone. Now, we mentioned at the start of today's video that there may be a bit of sector rotation at play. Something I've been looking at for a long time has been healthcare. Now, it's been hammered, of course, because of administration changes, but is that about to change? 5-day rotation looks pretty good. New little high here above this point looks solid for healthcare. And of course, we're looking at getting it above that 138 ultimately to get the move in. But there has been a little bit of undercurrent change, and that comes from that other chart, which is, of course, the top 10 stocks. Just, one session ago, pretty much, we saw a massive sell-off in the top 10 stocks in comparison to what the market was doing. And this could be the kickoff of rotation. So this is kind of interesting and pretty exciting. Since then, of course, we've seen the Russell do relatively well. So it just shows you that there's something going on underneath the hood. And some of these ratios are really important to look at if you're a trader and investor. Let's now move to the next one, which is, of course, IWM. Now, everyone's asking, is the small cap kind of market going to improve? Are we going to see the Russell do well? I am looking for a 0.365. I do want to see that. Ideally, if we get that, then of course you can say, well, that Russell does look like it's doing the right things. But I think most people will say when you put Russell on the chart, it made a new high. Most of the time, you're going to say, well, this looks bullish. There's no reason you'd say it's bearish. You could say, oh, a little bit of resistance here, but ultimately people are going to be going for around that 242, 243 target. And there's no reason to say that isn't the current way that this market is going. NASDAQ is similar. You can see here that we have a series of higher highs. And last couple of sessions, a little bit weaker considering the S&P was actually up those sessions. So again, that tells us that maybe the street is starting to rotate from a concentrated market to a more, I guess you would say, in harmony market when we're getting all of these stocks rallying up. Speaking of other things that have rallied, Solana was one of our kind of top coins this week, and it did pretty well, hit a new high, pulled back a little bit over the last 24 hours, but in general, it's been picking up. Ethereum obviously hit our big target here, which is that previous high from all those years ago, and it's having a little bit of a breather, which makes sense. A lot of liquidations around there. And Bitcoin is an interesting one because by taking this high out, you've got to just be bullish. But that certainly was a lot of vol that came in. So guys, it's exciting because volatility is back. We're seeing some interesting economic figures. But I always say, if you can't remember what the figure is 2 weeks later, it probably didn't matter. This PPI, I feel like, was such an outlandish number compared to what we expected or what the market expected that maybe you will remember it. So we will be paying attention closely to the economic figures. Prelim UOM, retail sales coming in less than 24 hours. Have we seen impacts to the US economy? We'll see from that. And in general, remember, stay optimistic. Stay with the abundance mindset that we talk about on this channel. If you enjoy our content, make sure to subscribe. And also check out the sponsor of today's video as well if you're interested in finding out more about what they do. Tiger Broker's offering special deals for you guys, which is always awesome. And of course, I always like it when they listen to feedback. And guess what? They're winning a lot of awards for that.